Hey everyone, welcome back to Corporate Decoder, the place where we take boring corporate documents and make them exciting. This time we're diving into Aon's latest quarterly report, and let's just say there are some interesting numbers when it comes to their money. So, what is the big takeaway? Aon is growing, but they're also dealing with a lot of complex financial moves, especially after that huge acquisition. Let's break down what it all means. If you like getting straight to the point with financial insights, make sure you hit subscribe and join our Discord community, linked in the description below. Alright, let's talk about Aon's money. They just dropped their report for the quarter ending in September 2025, and it is a packed one. The first thing that jumps out is how their money is flowing. Take their total revenue, for example. In the third quarter of 2025, it hit a cool $4.0 billion. That is a good chunk more than the $3.7 billion they brought in during the same time last year. The company says this is thanks to growing their core business and some helpful currency changes, and over the first 9 months of the year, their revenue is up to a massive $12.9 billion, a solid 12% jump from last year, mainly due to that big NFP acquisition. Now, when we look at operating income, which is basically the profit from their main business activities before things like interest and taxes, it also looks pretty healthy. For the 3 months ending the 30th of September 2025, operating income was $816 million, a nice increase from $623 million in the same period last year. For the 9-month period, it climbed to $3.1 billion from $2.7 billion. This is a good sign that their core operations are performing well. But what about the company's overall financial health? Let's look at their assets, the stuff Aon owns. By the 30th of September 2025, their total assets had grown to $51.6 billion. That is up from $49 billion at the end of 2024. A big part of that growth is in something called goodwill, which is basically the value of their brand and customer relationships over the price they paid for acquired companies. That goodwill alone is over $15 billion. Of course, companies have liabilities too, which is what they owe. Aon's total liabilities also went up to $43.4 billion from $42.5 billion at the end of 2024. A significant chunk of this is long-term debt amounting to over $15 billion. But what really matters to us as investors is the net income attributable to Aon shareholders. For the third quarter of 2025, this was $458 million, a nice leap from $343 million last year. And for the first 9 months, it reached $2 billion, up from $1.9 billion last year. This shows the company is bringing more profit home to its owners. This translates to earnings per S-share. Diluted earnings per S-share, which accounts for all potential stock dilutions, was $2.11 for the quarter. That is a solid increase from $1.57 last year. For the 9-month period, it was steady at $9.21 compared to $9.2. When we look deeper into the balance sheet, we see some interesting shifts. Their cash and cash equivalents held steady at around $1.1 billion. But what is really noticeable is the big jump in other current assets from $759 million at the end of 2024 to $2.2 billion by September 25. Now, what is driving that dramatic increase? A big chunk of it is listed as assets held for sale, which jumped from just $1 million to a whopping $1.3 billion. This is related to a major business they are selling off, which makes sense. Looking at shareholders' equity, the total equity available to Aon shareholders grew from $6.3 billion at the start of 2025 to $8.1 billion by the end of September. A significant event impacting this was the issuance of about 19 million Class A ordinary shares in April 2024 for that NFP acquisition, which significantly boosted their equity. Let's talk cash flow. For the first 9 months of 2025, Aon generated $2.1 billion in cash from its operating activities. That is a strong improvement from $1.8 billion in the same period last year. This is good news because it means their core business is generating plenty of cash. However, their investing activities used up $362 million in the first 9 months of 2025. This is much less than the $2.3 billion they used for investing activities in the same period last year. This reduction seems to be due to fewer large acquisitions happening this year compared to last year, when they spent a huge amount on the NFP acquisition. On the financing side, Aon used $1.1 billion for financing activities in the first 9 months of 2025. This is a big shift from the $1.6 billion they actually generated from financing activities last year. This change is largely because they paid down a lot of debt this year, unlike last year when they took on a lot more debt, primarily to fund the NFP deal. Aon has a program called the Accelerating Aon United Program, or AO for short. It is a major restructuring effort aimed at streamlining their technology and operations. They've incurred $32 million in expenses related to this program in the third quarter of 2025, and a total of $236 million for the first 9 months. While these are costs, The company expects this program to eventually save them about $350 million annually in expenses, which is pretty significant. One expense that has gone up quite a bit is amortization and impairment of intangible assets. It has jumped to $193 million in the third quarter of 2025 from $174 million last year. For the first 9 months, it is shot up to $593 million from $318 million. This increase is largely due to the NFP acquisition, which brought a lot of new intangible assets that need to be accounted for. It is not all just business operations. Aon also had to deal with legal matters. They had a rather significant legal settlement of $23 million in the third quarter of 2025. This appears to be related to those fraudulent letters of credit issues from a while back connected to Vestu Limited. They are still seeking recourse against the responsible third parties. And while they got some recoveries, it is still a reminder of lingering issues. Now let's look at some specialty metrics Aon reports. They talk about organic revenue growth, which measures growth from their existing business, excluding things like currency changes or acquisitions. That has been strong at 7% for the quarter and 6% for the year. But when we look at their adjusted operating margin, which is a way to measure profit excluding certain one-time or unusual expenses, Risk Capital's adjusted operating margin was 26.2% compared to 27.5% last year. So even though revenue is up, their profit margin in this segment has slightly dipped. On the flip side, Human Capital's adjusted operating margin improved to 30.5% from 25.2% last year. This shows strong profitability growth in that part of their business. And for adjusted diluted earnings per share, which again filters out those special items, it came in at $3.05 for the third quarter, up from $2.72 last year. For the first 9 months, it is $12.22, up from $11.16. This metric aims to give a clearer picture of their ongoing operational profitability. They also report free cash flow, which is cash from operations minus capital expenditures. For the first 9 months of 2025, it was $1.9 billion, an increase from $1.7 billion in the prior year. This indicates a healthy ability to generate cash after investing in their business. Now, looking at all these numbers, what is the story? Aon clearly grew its revenue, and their core operations seem to be performing well, evidenced by the increase in operating income and free cash flow. The NFP acquisition is a huge driver of this growth, contributing significantly to revenue and assets. But it also brings complexity with higher intangible asset amortization and integration costs. The slight dip in the Risk Capital segment's adjusted operating margin, while small, is something to watch. However, the improved profitability in Human Capital is a strong positive. Their ability to generate substantial free cash flow is a key strength, allowing them to manage their debt, fund operations, and return capital to shareholders through buybacks and dividends. Although their total debt remains quite high, the accelerating Aon United program shows a commitment to efficiency, and the expected savings are notable. However, the lingering legal issues, though managed, are a reminder of potential ongoing risks. Overall, Aon appears to be navigating a complex financial landscape effectively, using acquisitions for growth while managing costs and restructuring. The company shows resilience, but its significant debt load and the ongoing integration of NFP mean continued vigilance is needed. Alright, that is our breakdown of Aon's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.